real estate versus the S&P 500. Both offer potential for excellent investments. However, it is crucial to consider the advantages and disadvantages of each option. Reasons to invest in real estate over S&P 500 index funds. To begin with, let's address the question of why someone would choose to invest in an index fund named the Standard & Poor's 500. While the name may evoke a playful dad joke, let's set that aside and focus on why real estate could potentially be a superior investment choice. Use leverage to create better returns. Consider this perspective. Acquiring a low down payment loan for real estate, including investment properties, is significantly easier compared to investing in stocks. For instance, let's say you have a stable income and an impressive credit score. With just $100,000 as a down payment, you can purchase a $400,000 investment property. Consequently, your potential returns are based on the full $400,000 value rather than solely on your initial down payment. On the other hand, if you were to invest that same $100,000 in the stock market, your returns would solely depend on your initial investment. Stock investments typically require a 100% down payment, whereas real estate typically requires only around a 25% down payment. By engaging in real estate investments, you automatically increase your leverage by 5 times. The same level of leverage is not readily achievable when investing in stocks. Furthermore, real estate offers additional opportunities to leverage your investment, such as through home equity loans, home equity lines of credit, or cash-out refinancing. These avenues further enhance the potential benefits of your real estate investment. Greater potential for cash-on-cash returns. Continuing with the aforementioned example, let's consider a scenario where the property yields $500 per month in cash flow after covering expenses. This translates to $6,000 per year based on a $100,000 cash investment, resulting in a 6% annual return. However, it's worth noting that by utilizing a lower down payment loan, you may have the opportunity to achieve even higher cash-on-cash returns. The previous example presented was intentionally conservative. On the other hand, investing in an S&P 500 index fund typically yields around 2–3% per year. As a savvy real estate investor, your potential for superior returns surpasses those provided by an index fund. Even in the basic example provided, you can observe how real estate holds the potential to generate 2 to 3 times more returns compared to an index fund. Tax advantages. Although it is advisable to seek guidance from a tax professional, let's explore some fundamental tax benefits associated with real estate investments. Lower capital gains on long-term investments. Real estate offers the advantage of potentially lower capital gains taxes when the property is held for an extended period. Opportunity to claim depreciation. Investors in real estate can take advantage of depreciation deductions, which can help reduce taxable income and potentially lower tax liabilities. Access to a 1031 exchange. Real estate investors have the option to utilize a 1031 exchange, allowing them to defer capital gains taxes by reinvesting the proceeds from the sale of one property into another similar property. Opportunity zone investments. By investing in designated opportunity zones, real estate investors may benefit from certain tax incentives, such as tax deferrals and potential tax exemptions on capital gains. In contrast, when considering the tax implications of stocks, one significant risk is the potential for higher capital gains taxes, which can reach as high as 37%. It is crucial to note that these are general advantages and risks, and consulting a tax professional will provide personalized and accurate information based on individual circumstances. More control. Investing in real estate grants you greater control over your investment compared to other options. Here are some ways you can exercise that control. Screening and managing tenants. As a real estate investor, you can carefully select and manage tenants, ensuring reliable rental income and maintaining the property's value. Close monitoring of the local market. By keeping a keen eye on the local market trends, you can make informed decisions regarding your real estate investments, seizing opportunities and adapting strategies accordingly. Undertaking repairs and renovations to enhance value. You have the flexibility to make repairs, improvements, and renovations that can increase the value of your property, thereby maximizing returns on investment. Conversely, when investing in the S&P 500 or other index funds, your success heavily relies on the performance of a handful of prominent companies. Consider this. Did you know that a staggering 20% of the S&P 500's value is attributed to just 5 companies? If even one of these companies experiences a significant setback, whether due to a market collapse or poor financial decisions by the CEO, your investment portfolio can suffer a substantial blow. With real estate investments, while you are still susceptible to broader market fluctuations, you retain more control over the value and returns of your investments. Remember, maintaining awareness of larger market shifts will always be necessary, but real estate empowers you with a greater degree of influence over your investment outcomes. Real estate is a tangible asset. This aspect holds varying degrees of importance for different investors, but the tangible nature of real estate carries notable advantages. Consider the following example. If you own a single-family investment property within your local area, you have the privilege of visiting it at your convenience. Here are a few advantages of this tangible nature. Visual confirmation. With real estate, you have the satisfaction of laying eyes on your investment and perceiving its physical presence firsthand. Hands-on involvement. Stepping inside the property allows you to engage in renovation projects and witness the transformation firsthand. Witnessing the rewards. You can directly observe the fruits of your labor as you witness your hard work paying off in the form of increased property value or rental income. In contrast, stocks are intangible assets. While you are aware of your investment's existence, you cannot physically see or touch it. The best you can do is monitor its performance through your investment account. Furthermore, in times of uncertainty reminiscent of the Stone Age, owning a home provides a tangible asset that can offer security and shelter. In comparison, index funds lack this tangible element. It's important to note that the significance of tangibility in investments may vary for each individual, but real estate offers unique benefits in this regard. Advantages of S&P 500 SPY and other index funds. Investing in real estate demands active involvement, contrary to any claims stating otherwise. Even if you enlist the services of a property management company, you will still dedicate significant time to managing your real estate portfolio. On the other hand, investing in index funds follows a more passive approach. Once you select a fund and determine your investment amount, you execute the trade. From that point forward, you have the freedom to monitor your investment as closely as you desire. Less risk of a lawsuit. Real estate investing carries the inherent risk of potential lawsuits. For example, if a tenant sustains an injury on your property, you may find yourself in a precarious situation. Additionally, even if such incidents never occur, serious investors often incur substantial expenses and legal fees while forming LLCs and undertaking similar measures. These legal considerations can consume both your time and financial resources, imposing a burden on your real estate investment business. In contrast, when investing in the stock market, you are not exposed to the same level of personal risk. While a company you invest in may encounter legal challenges, the direct impact on you as an investor is typically limited. It is essential to understand and evaluate the legal risks associated with real estate investments, as they can have significant consequences on both your time and finances. You don't need as much of a vision. In every investment, there is a need to project into the future to some extent. However, this need is significantly heightened in the realm of real estate investing. It requires a greater degree of creativity and foresight to envision the potential of your investments. Consider the following questions that emphasize the importance of future projections in real estate investing. Investment duration. How long do you intend to hold your investment properties? Having a clear timeline helps in strategizing and maximizing returns. Exit plan. What is your plan for exiting your real estate investments? Thinking ahead and having a well-defined exit strategy is crucial for achieving your financial goals. Market downturns. How will your investments fare if the market experiences a significant decline? Anticipating and preparing for adverse scenarios is vital in mitigating risks and safeguarding your portfolio. On the other hand, investing in an index fund allows for a more passive approach. Once you make your investment, you can adopt a set-it-and-forget-it mindset to a certain extent. The long-term performance of the companies within the fund becomes the driving force behind your investment success. While projecting into the future is essential in all investments, real estate investing demands a heightened level of creativity and vision. It requires proactive planning, adaptability, and a keen awareness of market trends to navigate successfully. A lower initial investment. A significant drawback of real estate investing is the substantial initial investment it typically demands. For instance, purchasing a $400,000 investment property might require a down payment of up to $100,000. While the potential returns can be substantial, the upfront cash requirement can act as a barrier for many potential investors. On the other hand, index fund investing offers a more accessible entry point. With as little as $100, you can begin your investment journey in index funds. It's important to note that the specific investment amounts may vary depending on the chosen index fund and the brokerage firm you decide to work with. Final thoughts. The choice between investing in real estate or S&P 500 index funds is a highly personal decision. Only you can determine which option aligns best with your financial circumstances and goals. As a general guideline, real estate investing tends to offer a broader range of benefits, but it also requires a higher level of commitment and dedication from the investor. It is essential to approach the decision with an open mind, allowing yourself to explore all possibilities and make informed and confident investing choices. Thank you for watching our video. If you're interested in learning location analysis techniques for real estate investment, click on the video displayed on the screen. Make informed investment decisions and stay tuned for more valuable content. Thank you for your support.